The crypto markets have crashed heavily. So the question we ask in this video is now the right time to start buying Bitcoin and other crypto assets again. In this video, we're going to cover where we are in the markets when it comes to the main crypto coins. We're also going to cover a bull and a bear case to see what is likely going to happen next. And finally, what you can do as an investor right now based on the information we've covered in this video. If you like videos like this, please subscribe to this channel and hit the thumbs up. It will really help out the channel a lot. And now let's dive into the video. So in the last 30 days, we have seen a terrible performance, especially in the crypto markets. Equities have also taken a hit, but nowhere near compared to Bitcoin. While Bitcoin is now down minus 32% from the highs in last month alone, so 30 days rolling, 22% down, Ethereum 27% down, Solana over 30% down. So all of these coins have suffered dramatically. And when we look at the fear and greed index, we are at the lowest we have been basically during the entire time of this bull market. We're now in the extreme fear territory where the fear and greed index has been noted as 12. Lately, today it's at 15. So we're very, very low and in the deep fear category. And whenever we are in the extremes, whether it's the extreme fear or the extreme greed, we as investors have to be especially interested in the market because that's where the biggest risk to return opportunities usually arise. Right now, we're going to cover exactly the bull versus a bear case to see what is likely going to happen next and how you can take advantage of the current situation. So for the bear case scenario first of all, we have a breakdown of technical market structure of Bitcoin. This is what a lot of traders have pointed out also. And basically this looks like this here on the weekly chart. We can see that since the start of this bull run in 2023, Bitcoin has respected this red line, which is the weekly 50 EMA, like a hawk. And every time we bounced off of it and followed basically by a huge rally, over 100% here, then a deep correction during the tariff situation back in April, and then another rally up to almost 130k, where we saw this liquidity sweep, and then we saw a breakdown of this level for the first time. We've also closed beneath this previous low here at 98k, so we have officially entered a bearish market segment where the dynamic support that held Bitcoin up the entire time since mid of 2023 has broken. And that is, of course, not good for the whole crypto market. In addition, many people are following this 4-year crypto market cycle narrative, where historically we have seen a sort of repeated cycle in the crypto markets. And what I mean specifically, I want to show you here is that every time after the Bitcoin halving, which happens roughly every 4 years based on the supply reduction, we do see a bull market, and that has played out in 2012, in 2016, in 2020, as well as in 2024, where price shot up after the halving for roughly around 500 days, sometimes more, sometimes less. But during the last 2 bull markets following the halving cycle, the crypto market top was in roughly 500 days after the halving. And if we apply that to the current situation, we end up with November 2025. So based on this model here, we could talk about the cycle peak for Bitcoin, followed by roughly 1 year or more than 1 year of bearish price action. We have seen that in 2014, in 2018, as well as in 2022, where Bitcoin dropped more than 70% over the course of 1 year. That is definitely a grim outlook if that would really be the case. So these are definitely 2 strong arguments for a bear case. If we look further, we have seen the tariff risks increasing again, which basically sparked the biggest crypto liquidation event we ever had on October 10th of 2025, where Trump announced a 100% tariff for China. In addition, we have the MicroStrategy situation. If you've been following this channel, you likely know about MicroStrategy, which is a Bitcoin treasury company. Basically, what they do, they leverage debt and buy Bitcoin. That is their key purpose of the company, and MicroStrategy now owns over 3% of the total Bitcoin supply in the market. MicroStrategy has come under a lot of bearish pressure due to the Bitcoin price action, but also due to the MSCI downgrade risk. This downgrade, of course, would risk a potential liquidation of all MicroStrategy holdings for investors that hold these specific index funds automatically after the cutoff date, which is in January of 2026. Additionally, we have lately seen more cautious tones from the Fed on monetary policy, specifically from Powell during the October FOMC, where Powell was more cautious on not guaranteeing any rate cuts and seeing how inflation as well as the US recession risk plays out, because now major banks are pricing in an over 90% chance of a US recession, which of course will hurt risk on assets like stocks and crypto. Additionally, we have seen institutional demand exhaustion with lower ETF inflows and also massive outflows following the October 10th liquidation event. So that is one of the drivers. We're just missing buying pressure right now. And finally, we've also seen the Bank of Japan increase in the 10-year bond yield, which typically suggests a more hawkish or risk-off sentiment in the markets and a potentially yen carry trade unwind risk. And that also goes hand in hand with a recent uptick in the US dollar strength. Overall, we can definitely say that there were a lot of reasons which sort of caused this market crash, and also for you as an investor to still be cautious when it comes to the short-term outlook on the economy as well as the prices of risk on assets. However, on the opposite side, let's also quickly discuss the bull case. And as I have preached on this channel, is that global liquidity has a very high correlation to risk on assets, especially to Bitcoin and crypto, and that has had the strongest correlation of any asset class in the past. With that said, we do see a lot of positive catalysts when it comes to global liquidity. QT, so the quantitative tightening cycle by the Fed, is ending in December of 2025. This again is the balance sheet reduction, which is stopping. Additionally, we do see further rate cuts into 2026 being expected, which is overall a bullish sign. Again, rate cuts make borrowing cheaper, increases the borrowing in the market, and increases the total money supply, which is great for risk on assets. In addition, global economy is still expanding. We have stimulus being run in China. We have the ISM index expanding. So even though there is a recession risk, overall the global economy is still expanding at the current level. Based on the longer term trend, even though we have a shorter term uptick in US dollar strength, a weaker US dollar is still likely based on the policies that the Trump administration is pursuing. Additionally, we still are on the back of a lot of favorable crypto regulation in the US. We have the US Genius Act, we have the US Clarity Act, as well as Trump's personal crypto investments and that of his family, which overall signals a bullish sentiment and a bullish outlook for crypto as a whole, as an asset class. And so that is not to be forgotten about. And lastly, we've also not seen a historical top signal met. In any of the previous bull cycles in the crypto markets, the bull market always ended with a lot of euphoria, a blow off top, some sort of overextension on the rainbow chart, pi indicator, or any other crypto bull market indicators that have stood the test of time over the past bull cycles. But as smart investors, we do know that history doesn't always repeat itself. It just rhymes. So you can make out of that what you want. However, in my opinion, there is a strong bull case, but also a strong bear case for continued downside. It's really difficult to specifically pinpoint what is going to happen next because there are no certainties in financial markets. There are only guesstimates. And based on the data that we have seen here, I think it's definitely likely that from the current levels, we do see a relief bounce, a relief rally, as the fear index is just so extremely low. And there has been such a huge sell-off in a short period of time. So we can definitely expect a relief bounce. However, we will also look at the charts later. It doesn't look like a complete bullish reversal again. So I do expect further downside risk moving into 2026. When it comes to investing in crypto, it's always important to adjust your time frame, because in crypto, a lot of people lose money because they don't have the patience or the emotional stability to weather the storm. And that's extremely important if you want to succeed in crypto's upside, because there is a lot of upside in the future. If we look at the past 8 years when it comes to returns, Bitcoin and Ethereum as well as most other crypto coins, have massively outperformed any other asset class when it comes to returns. And Bitcoin specifically has had a yearly return of 50%, 50. That's absolutely incredible over the past 8 years. If you do it right, you dollar cost average smartly during corrections like this, then you can take best advantage of lower prices and of future long-term growth. Same for Ethereum, yearly 33% annual return, which both of these assets, just culminates in long-term outperformance of crypto assets. With the high returns, unfortunately, there comes a lot of volatility with crypto, right? And if we look at the returns here by year for Bitcoin, we do see years with minus 60, minus 70% return, which is dramatic if you do not know what you're doing as a crypto investor and do not properly dollar cost average your way down if prices fall, or if you lose your temper and sell into fear, then you can definitely be hurt a lot. And that is really a common theme, that in crypto highs come with lows, and during lows like this, you have to keep the long-term conviction and improve your average price in high quality assets and have a long-term perspective. And if you adjust your time frame and prolong your investment horizon and think of 5-year chunks, of decades, then small investment in cryptocurrency done over time and compounded over time can yield tremendous results. And that is something you have to keep in mind as an investor. And if you are a serious investor looking to take advantage of crypto long term, then this is actually a great time to start. Because whenever there's fear in the market means there are bargains and great opportunities for buying. And inside Beyond the Market, we specifically teach the core and vault method to our sophisticated investors, which basically is a combination of core crypto assets as well as high yield stablecoin lending, which balances your portfolio and gives you passive income while also capturing the upside, in addition to protecting your downside risk due to the capital allocation framework. And your portfolio allocation needs to flow with the market cycle, from boom to peak to decline to depression to recovery. And you need to form a clear understanding of your portfolio allocation to stablecoins deployed into high yielding lending opportunities, Bitcoin, as well as altcoins. And right now, if your portfolio looks something like the one on the left here, where we have 40% altcoins, 40% Bitcoin, and 20% stablecoins, then you have suffered a lot of drawdown in the recent days and weeks. This was definitely not the right portfolio allocation to have, because you as an investor, you need to take profits when the market is rallying. And we have seen huge rallies on Ethereum, on Solana, on Bitcoin as well. So you need to take profits during those times into stable coins. And ideally your portfolio looks something like this on the right hand side, where we have a high allocation to stable coins and Bitcoin and no altcoins in your portfolio. Of course, if that's not the case, which also includes my current portfolio, because I missed selling some of my holdings in Ethereum and Solana, then right now is definitely not the time to sell those assets, because they have tanked a lot, and right now there are more buying opportunities than selling opportunities. We'll come to that in a second. And right now your portfolio should be more focused on capital protection with allocation to Bitcoin and stable coins. And if you're still allocated to altcoins, maybe consider selling them on a bullish bounce that we might expect over the coming weeks or months, depending on what you personally think, of course, where the market is heading long term. So if we look at the Bitcoin chart here, we can see that we have dropped already up to 35%, down to 80K, which was the spike last week, and we're now hovering around the 87K. Just looking at this massive selling pressure in a short period of time and the fear index being so extremely low, in my opinion, we can definitely expect sort of a relief rally from the current levels, maybe up to the resistance here at around 98K, 100K, and see some resistance there. But this relief rally will definitely also help altcoins a lot. And then the question really is, are you a fundamental investor or a technical trader when it comes to what you expect, what is likely going to happen next. From a technical perspective, as we have broken this support level here of 98K and the weekly 50MA, which has acted as support until now, it's likely that it's going to act as resistance moving forward. So we might definitely see another push to the downside from the current levels, and again basically see some sort of reaction in the 75 to 80K range. However, if this might truly be the start of a bear market, then the downside risk is further down, maybe down to the 55 to 60K range, where we also have this 200 EMA average. And if we see a decline like this would overall result in the maximum maybe 50 if not 60% drawdown when it comes to Bitcoin, and we don't want to even speak about altcoins because they usually suffer a lot more. So this might be one scenario. Another scenario is also that we come back up here and actually breach over the resistance level, maybe touch it again as support, basically break and retest it, and then a continued push higher as the final end of the bull market, and an even deeper correction. And what happens next really matters depending on if you're a short-term or a long-term investor. If you are a long-term investor, doing a regular dollar cost average into high-quality assets like Bitcoin is definitely worthwhile, and at the current level of 85K is definitely worth an option. And if you think of a 5 to 10 year horizon, the likelihood that Bitcoin is going to be higher than 80K is very, very likely in my opinion. So definitely a decent place to add to your long-term portfolio. If you're just getting started in crypto investing, again, I highly recommend splitting up your total investment money, let's say into 3 to 5 to 6 chunks. And if Bitcoin continues to drop, just basically buy more and improve your average price even further. And that's an amazing mindset trick because you'll actually be happy if the market is falling further. On Ethereum, we have seen a massive drawdown, 45% down to the 2.6K level. We're now at the 3K level. Over the long term, Ethereum has been stuck in this range between $2,000 to $4,000. If Ethereum ends up coming down to this range and basically hits the $2,000, $2,200 level, then this is definitely, in my opinion, a great buying opportunity because historically this has acted as support and resistance. And if you have been smart investor, then you would have invested basically latest on the break and retest here of this level and got out of the market once price struggled to break through the all-time highs and stalled at 5K. That's why I sold the majority of my Ethereum investments. However, as I'm fully transparent also here on this channel, I have not sold all Ethereum holdings because I still believe long-term in the asset and I didn't expect a strong price drop like this. So while I have taken a lot of profits up here, I still hold, of course, Ethereum in my portfolio because long-term it is a good asset. When we look at Solana, Solana has also dropped a lot from a $250 level to now the $125 level. This is a great support level here. The 120 to 130K range has acted as support many times in the past, and adding Solana here is definitely a great price point. But of course, you have to consider that if this level breaks, then there really is a huge downside risk to fall further. However, as of right now, this level seems to be holding, and it is a good time, in my opinion, to add Solana here. We are at support here, and Solana has already dropped a lot. When we look at MicroStrategy, the Bitcoin treasury company, we have broken support to the downside. Potentially this was a fake out, but support here at support, which was previously resistance at $183 is currently broken as we're at $174 due to these two factors that we have touched on earlier, the MSCI World downgrade risk for MicroStrategy, as well as the struggling Bitcoin price, has resulted in a huge drop for MicroStrategy of up to 64% from the highs. So it's definitely an interesting inflection point right here and a good value area for adding MicroStrategy to your portfolio. However, consider that if Bitcoin continues to fall, then MicroStrategy will just act as a leveraged Bitcoin hold, and if Bitcoin basically drops 10%, then MicroStrategy will likely drop at least 10 to 15% from the current levels, if not more, again, because that is basically a leveraged investment for Bitcoin. If we look at other potential investments right now, there is one I have personally added to the portfolio, which is the Circle Internet Group. And these are the issuers of the USDC stablecoin. Again, stablecoin issuers are one of the most profitable crypto companies because they make a profit on transaction fees. And of course, stablecoins are one of the highest transacted crypto coins out there, and the coin has fallen dramatically, almost 80% from the highs after a spectacular IPO back in June. So we're basically now almost at the IPO price, a little bit higher still, but we have dropped a lot. And I think from a long-term perspective, this is a massive opportunity. Again, the US government expects the stablecoin industry to be around a $3 trillion industry, while we are currently at 300 billion. So another 10x away from the current levels. And I think Circle Internet Group will be one of the main benefactors, because that is the only crypto stablecoin company that actually is Genius Act compliant. So definitely worth looking into. And price, of course, is difficult to see, but we are basically at the lows of the IPO. So in my opinion, a good opportunity to add it to your portfolio if you believe long-term in crypto, in stable coins, as well as Circle as the issuer for the USDC, EuroC, and other stable coins. With that said, we quickly look at equities. Equities have rebounded since the drop last week. We're still, from a weekly perspective, in a full bullish trend, so not too much pain has been there. It really depends if Bitcoin is going to follow equities into new highs, or if equities are following the crypto markets and dropping significantly. Nobody really knows at this point. Again, there is a bull and a bear case for both scenarios. But in the long term, I think the most important part is to acquire high quality assets so that, inflation doesn't eat at your wealth. And inside Beyond the Market, we're going to cover the exact strategies, what you have to do when it comes to portfolio allocation, achieving high yielding stablecoin opportunities with up to 12% in annual return, and how to capture crypto's massive upside moving forward. If you're interested to work with me personally, check out the link below, and I will see you in the next video. Cheers.